Hello, everyone. I'm so happy to see you all here. I'm very excited about this panel because even though we've had some incredible speakers, I'm incredibly excited about what we're going to talk about today. Our panel today, Powering Progress, Infrastructure Investment and Industrial Competitiveness. Three I's that I think we don't talk about enough and that are so important for Mexico's future. Why is that? Well, for a bunch of reasons we'll be hearing today, but I think one of the things that is worth underscoring is that Mexico, as always, is at a crossroads. It always feels Mexico's at a crossroads. But this time, I think we're at a very serious one because we're sort of on the verge of being in a very sort of important moment in our reconfiguration of the world, and Mexico's position as the southern neighbor of the United States and within the global supply chain is key. But to make that really take off, we need to talk infrastructure, we need to talk investment, and we need to see how we deploy it to make it really take off. So we're so lucky to have our speakers today. I'll introduce them as we go, so as not to overwhelm you with names. But I think what I really want to start with is in a bit of an unusual way, which is I want to toss all the questions I want to ask you at once. For this very reason, because we've got the three I's that we're talking about today, investment, infrastructure, and industrial competitiveness, and I want us to link them all together as we go. It also lets you pick and choose which question you want to answer. So the three questions are these, interlinked as they are. Number one is, what does your sector specifically need to do to let Mexico's growth take off, economic and investment? Number two, what do you need from the state to get investment to take off? And finally, what do you need from each other across the private sector to really get investment and economic growth booming? Let me start with Carlos Garcia Moreno. You lead one of the world's most important telecoms companies. What do you think? What does your company need to really take growth to the next level?
Well, thank you for the invitation, Alex. It's very good to be here again in this panel. Well, I think, as we saw in one of the previous panels, connectivity is key in this era. And being a telecom company is all about connectivity. That's the first thing that comes to mind. And the connectivity, can be a very broad term. You really have to talk about having robust networks, fast networks, secure networks. So I think if we want to entice people to come over here to set up their plans, supply chains, and so on, we need to be able to have those very reliable networks in place. I think that is a key element, again, for competitiveness. I think that today in Mexico, we have a very, very good standard in terms of the digitalization of the telecom sector. And I think that certainly at our level, being able to fund the investments in Mexico is something that makes a lot of a difference. In not so distant past, it was the case that if you needed some funding of certain materiality, there was no option other than to go to international markets, which meant often FX exposure and uncertainty in terms of accessing the markets. And one of the things that has definitely changed is that by virtue of this growth that we have had in the financial sector, financial savings, a lot of this coming by way of the Afores, that now we have some more secure funding available in the country that is in our local currency. And that's something that is, I would say, a very major element in terms of helping us to fund the investment that is required for the future. I think as a society in Mexico, we have one of the highest rates of penetration of homes in all of Latam. I was just reading some statistics from the INEGI. 92% of the people older than 60 years old have a phone in the urban areas, but we still need to work on the rural areas And I think that's probably where we might want to get the government more involved, and we work together with them to make sure that we can bring connectivity also to those areas that are farther away and obviously more difficult economically to cover them, but also to try to make up the difference in terms of the homes passed. But again, having today a standard of 5G already in a number of cities, 120 cities, and being able to lever that through our fiber networks so that we can, again, provide these secure and fast networks that companies demand when they come over to Mexico.
I see you dropped the F-bomb there, Carlos, funding. I was very keen to hear more about local funding, like funding coming from Mexico to Mexico. I think that throws the ball right into Raúl Martínez Hostos's court. You are managing director of Barclays. Why don't you tell us a bit more about what your vision is when it comes to financing investment within this growth?
Okay, well, thanks Alex, for the question, and Milken to be here, and Ana specifically for inviting us here. I would emphasize quite a few points right now. So first of all, we can't just see it only from the financing lens. So when we talk about infrastructure, which is the topic of this panel, I would like to see it from the lens of the various stakeholders, local and offshore. Local meaning investors and the government and other participants. When we talk about investors, I think the word we've heard most today is Mexico, and after Mexico, maybe investing, and then after that, Afores. Mm-hmm. So I won't be redundant in everything that's been said today in terms of how the Afores assets have grown. But what can Afores do more and better? Or what can the government do to equip the Afores to be more strategic in how they can position investment in infrastructure in Mexico? I think a key thing that sometimes we fail to understand is how new the new system, the pension system is. In the morning they talked about Chile, and Chile has 70% of GDP under the pension funds. So it's evolving, and hats off to the Afores because they have done a great job to get more sophisticated and to invest on real assets. But there is some room for improvement, and there is some room for improvement from the regulatory side, creating new incentives for Afores to really, define what their path is. If you think about it, when you talk to global investors, typical investor has short-term views and long-term views. Here, basically the Afores, when they participate in projects and the capital markets, that's a big reason why capital markets haven't developed as much, they're buy and hold. So when you go and see an investor, you see a portfolio manager of the same investor looking at the short term, who are trading, and the long term, so that's the way you develop a market. And when we go and pitch ideas and we throw ideas to infrastructure, it's the same team. And poor guys, they're really stretched. And it's looking at various portfolios, and looking at sort of what they have to do with the pension fund money. It just doesn't. When you have a trading view that can really create that liquidity, then you start breaking that vicious cycle that has been referred to a lot today. But also, we talk about the Afores, but what about insurance money? Like the insurance assets under management in Mexico are 1/3 of the Afores. So you cannot ignore it. It's really relevant. And I think the insurance system is 3 steps behind in terms of regulatory, in terms of sophistication. But you heard it from the Apollo colleague earlier. They have a theme, Apollo has a theme, and it's long-term capital. That's what you need for these type of projects, and they're not the only ones. And insurance money can play a very important part in financing long-term solutions for infrastructure. I could go on and on, but today insurance companies are very focused on sort of investing in government paper. Like the Afores maybe 20 years ago, the Afores are getting much more sophisticated. When it comes to banks, and I would divide banks, commercial banks and development banks, I think both sides of the equation have done a lot, and financial penetration has grown, but the reality is both, I think, have failed to get to the next level. Mm-hmm. And I think commercial banking, I think there's great success, we have a great banking system, but there's room to go. And it has been focused on, you look at the Mexican banks and the returns on, on equity are in the high 20s or in the mid 20s, low 20s. They're very. What's the incentive to really move the needle further? And that's, I think, an area of opportunity where, building a successful financing platform on the low-hanging fruit is good, but we need to move one step ahead. And I think that's where banks, and I speak on Barclays, globally, but also I think I see that there's a lot of commercial banking that needs to go one step further, not depending on certain securities that obviously I think are important, but just move one step ahead and work with development banks. Development banks did not lend money for many years, 2018 to 2024. Now with guys like Roberto Laceria and Jorge Mendoza leading the investment, and a president who really cares for them to bridge the gap, then we can move from being a competitor to being a complement. You cannot have the balance sheets of the development banks competing with commercial banks on every asset, on every opportunity, because that's not what, they're not there for that. They're there to bridge the gap, to look for opportunities, not to have, their focus is not returns. Obviously, it's not losing money, but it's really bridging that gap. And I do believe that the balance sheets of development banks have an area of opportunity and being more creative, maybe not putting billions, but finding ways to create guarantees and ways where certain projects that are hard to bank in the short term can then, pave the way to have an exit at the capital market. So, those are the big things. The government, I can talk about it maybe in my next stage, because I could go on, but I think the government's role here is very important from a regulatory perspective, but also bringing, I think, the great landscape that they've defined in Plan Mexico, and little by little they're getting down. But I think defining, much more specifically, we know where their ideologies are, but I believe that there's a great area of opportunity to really listen to the private sector. They've been open to it, but if there's one size fits all, it's not going to work. There needs to be a back and forth, and I'm eager to hear Gautam's view on that. But I think there's a back and forth between investors and the government that I think the government's open to that. But if we don't get that going, then we'll be here in 5 years, thinking of the promise and the idea of the promising landscape we had. But we'll just have a handful of projects instead of really having a cohesive plan in which we understand what the public policy focus is, but on the other hand, the public sector understands how you can make the deals and projects investable.
I'm also very interested in what Gautam's got to say, but first, let me go to Ricardo Fernández, because you're the head of BBVA's commercial banking sector. Are you having these conversations with the government? Are you having these conversations with development banks? Tell us a bit more about that from your perspective.
Thank you, Alex, and thank you very much for the Milken Institute for the invitation, and thank you, Ana, for your amazing job that you are doing for Mexico and the US. Yes, we're doing so. I would say that what is missing in Mexico is projects. There's a lot of liquidity, there's a lot of people trying or wanting to invest in Mexico, but we need projects, and we need to build infrastructure at the Chinese style, a la China, no? And to do so, the things that we are doing with the Mexican governments is we built what we call the Local Infrastructure Development Plan, the LIT. Basically, with a very clear methodology, we built a specialized team. We created a specialized team, and that team first does financial diagnosis of the state. At the final end, the great majority of the infrastructure in Mexico needs to be built at a local level, not a federal level, a local level. So basically what we do is do a financial diagnosis of the state. Secondly, we build a multidisciplinary discussion on the things that are missing in the state. We put in the table BBVA research, for instance, and they tell us, okay, this is the competitive advantage. The real competitive advantage of this state is this one. So to build infrastructure, you need to build infrastructure going from this point to this point, and that is going to have an impact, and that's going to scale in terms of the impact in the economy of the state and the impact of the economy in the economy of at the federal level. We put in the same table productive models grow in the bank. So all the transactions that the bank has, we put it in the table, and we tell, along with BBVA research, with our economists, we tell the governors, okay, this is the kind of things that you should do to increase competitiveness in the state. So we put all the projects in a list, and then the state selects, okay, I would like to go to this, this, and this. And with the financial diagnosis that we provide, and telling them that you should do infrastructure in these types of things. I mean, 50% of all the infrastructure that we are discussing with the government right now is infrastructure that the government shouldn't need to put any money on the table because it's auto-financed. No. So this is the kind of things that we're putting on the table. We put a structure and then we put the bid. As of today, we have 11 states that we are working on, and we have 170 billion Mexican pesos of projects that we generated from scratch. So this is the kind of things that I think every company that is leading the country should do to increase infrastructure.
That's incredible. A lot of the conversations I have with investors seem to be waiting for international capital to also make its move. It's sort of this weird dance, this game of chicken. Therefore, I mean, we just heard that banks here based in Mexico can get very granular about their analysis. It's a state-level analysis rather than this federal one. What's the view from Miami?
So first of all, thank you for having me. The view from Miami is beautiful, as always. Every day is sunny. But to directly answer your question, so I think two things. One, we already made a move. So we put over $1 billion of capital out, a lot of it organic, to build data centers in Mexico. Via Kio, 1,200 people employed, triple the size of the company. So that's what private capital can do. Some of it, of course, the government can help, but also it can do it without the government's help in many of the sectors. In order to understand private capital, maybe let me try and express to you what we are like as I-squared capital, and that'll give you a good idea of what it takes to attract that private capital, right? So basically, we're quite boring. We only invest in infrastructure. We manage about 50 billion. And we invest in, I think we have 72 countries, right? So we have 72 countries. We do middle market infrastructure and work with entrepreneurs and local families to try and build that infrastructure company professionally. We are equity capital most of the time, so we rely on local banks and other local lenders to help us. We control investors, and about half my portfolio is companies we have built, like scratch from entrepreneurs, right? So we copy companies. At the core of it, two things matter. Number one, for the country, the opportunity set you have. I've listened to all the talks very carefully, starting with Mike's panel in the beginning. And I heard about the demographic and the opportunity and the nearness to the US and nearshoring. And that's fantastic, right? So then you ask yourself, despite that, how come Mexico has not achieved its potential? That's the relevant question, right? So, and I will tell you that almost no country can develop that industry without infrastructure, because that's the rail, right? You talked about China, how China has built its infrastructure. And no country can do that using their own balance sheet. This doesn't exist. US attracts the most FDI in the world, and US has a pretty decent balance sheet and unlimited power to raise debt. So you need friends and other people to come in to put in capital. That capital, just like a 4A capital, is other people's pension. I take money from nurses and doctors. We don't have any Bill Gates type of money. We have basically pension plans, sovereign plans type of money, right? And they want to be respected. They want to be treated fairly. They want a chance to compound that money. And it's okay, they lose money, that's fine, but they want that level playing field. And that level playing field is entirely in the hands of the government, right? So generally that's what capital needs. It needs respect for contract law. It needs an opportunity to grow, to compete fairly, to make money, to lose money, but do it fairly. And I think the government's role in this is very critical, which is to supply education, healthcare, all the basic needs that are needed. I come from India long years ago, and India was not much different at one point of time. And I see the progress of that country. I've seen Indonesia, I've seen smaller countries progress. And it is a willingness to accept that capital. It is a willingness to make sure it's treated fairly. It is decisiveness. Speed matters. Mexican economy is not known for speed. I'm sorry, but it's not. And then you just need to make sure that your local entrepreneurs have a fair shot. And the government should select the sectors they want to do. Free rein, you can select. And then ask private sector to come in and do other things. I often advise some sovereigns and I tell them, just copy the contract. Every concession agreement exists in the world. IFC has standardized contracts. You go to a country that you like, take the contract, copy it, and put it out for bid. Don't rewrite earth every time. Standardize your contracts, ask the private sector to compete on those contracts, and then accept that, that is the contract that is there. Like long years ago, India started that in roads. $30 billion of toll roads later, they're still going strong. And out of that 30, I think 29 is from international investors. Very little is from their Afores. Right now, their pension plans invest alongside us through our funds, but don't rely on just your own capital, because it's also not the best way to diversify somebody's pension. Right? You can't ask the poor pension holder to double down because you feel certain ways. So I think it's all doable. The window of opportunity for Mexico is now. I have never seen such a mismatch of opportunity and present. So I hope that Mexico takes that leap.
Very interesting what you're saying here, because Mexico has Plan Mexico, which is Claudia Sheinbaum's industrial policy, ambitious in scope, but when you look up under the mattress, there's very little cash from the government, right? So they struggle to come up with the money for the basic services that we need to get the economy going, right? So we're talking roads, we're talking railways, ports. They're sort of investing in that. But as you say, the rest does need to come from the private sector, either locally or internationally. That takes me to, I guess, the question that we've left open, which is what do you need from each other, given that the government is relatively limited? What do you need from each other to trigger that investment? What do you think, Carlos?
Well, as I was saying, I think that in the case, at least of the sector that I'm coming from, projects are pretty well defined. I think there's the capacity to raise the funding that is needed to carry out those projects. I think the challenges often are that it is uneconomical to be able to reach certain areas, and that's where you typically will have to get the support of the government. So there needs to be certain plans, both for the investment, but also for the consumer. In the US, we had a company that had access to this a federal funding program, which were universal services. They would basically pay people to spend a certain amount on phones or data, and up to a certain amount, people then would have to pay up. Okay, but there was a certain minimum access to services that was basically provided by the government. But I think in this respect, what there's a number of areas in this in the country where there's a lot of infrastructure that is already being built or is half there. And one of them, I think, is the issue of digital payments that was mentioned before. That's something that I think that we need to give more importance to. I think it's, we want to bring a community, a society that is all connected, but we also need to make sure that those connections are fully taken advantage of. We heard this morning one of the panelists saying how people would use their debit card to get some cash out of the machine so that they could then proceed to make some payments in cash terms, which is exactly the opposite direction of where we should be headed. Okay, so there's things that have been already built that are, as I said, halfway there. I think that we should be able to try to kickstart them again. And again, this is important because to the extent that you bring in a greater part of the population, that means also that you will have more clients going forward, and that those investment projects that you are seeking to do will actually be paying for themselves. Okay? So I'd say, in general terms, that the issue of financing probably can be sorted out. But I'd say there's one very important thing that we should take notice of, which is the Afores are relatively new. Okay? They are the newest class of pension plans, in practically Latin America, certainly for the big countries. And in this early phase, these first 25 years or so, they basically, for the most part, been funding the government. Okay? So there was not too much risk. There was not much credit risk. And I think that we are moving into a new phase. And in this new phase, there's not more external debt that can be brought down by the government. Okay? We're practically at that flat. So by necessity, a larger part of the funds of the Afores needs to be channeled to the productive activities. And that's something that has not been properly done before. And in this country, generally, I think that we have lacked credit expertise, okay, for a number of reasons, historical and what have you. But this is something that we all, as a society, need to focus on. How are we going not to squander those resources that we have been able to put together so that they actually make their ways into productive investments with little losses, as little as they can be, and that they can be as productive as we hope we should be. So I think that's the big challenge in Mexico, I think. In the past, it was lack of savings. We didn't have savings. That was the main constraint. Probably India was the same thing. These times, it's not lack of savings. But will we be able to funnel those savings correctly? Will we be able to do it with no losses? Can we provide more credit to the system overall? And I'm not talking only about Afores, because I think that's an area where the country is lagging. And I think that's one of the biggest challenges that we have, again, if you look out the next 5-10 years, it's beyond Plan Mexico, I think.
Raul, I mean, that's the question.
Yeah.
Can we provide more credit overall? What's your thought?
I think so, but I think a very important part is sort of leading one of the the most relevant investment banks in Mexico. I think we focused a lot beyond trading securities and doing bonds, traditional investment banking. I think what we've tried to do and separate or distinguish ourselves from our peers has be that bridge between financing the capital markets, the private markets, local investors, international investors. And I remember 10 years ago we created the first platform, co-investment platform, in which local Afores co-invested with one large pension fund, which was CDPQ, the Canadian pension fund manager. And that platform sort of created the largest CKD that's ever been done in Mexico. And that CKD, which was called Infraestructura Mexico, and now it's Salon, co-invested with CDPQ in a number of aspects. And that was sort of innovative. It was new. But it's trying to see how you can connect the dots, because locals want validation and the technology that the international investors bring. I2 is a great example. But also, the internationals want sort of, I hate using the word political insurance, but sort of the local DNA to be able to sort with deal. And when it comes to infrastructure, the local DNA is very important. Dealing with political risks, dealing with a lot of challenges. Every project, every infrastructure project will have challenges. How do you have those partners? And if you have a local operator that can help you, you create those consortiums. A couple of months ago, we closed a transaction of a sale of a port where there was a consortium between a sovereign wealth fund, which was GIC, partnered up with GIP, and then an operator, a port operator deal, one of the largest port operators in the world. Those consortiums are created to compete in processes. Why? Because there's value added. If you add the Afores to that equation, then you've got the whole enchilada, as we say. So that's, I think, what we need to work with. But very importantly, given the limited resources the government has, especially because I think President Sheinbaum responsibly will not start spending and using, and taking the deficit to levels of other emerging markets, we need to be creative. And I don't think getting into just, people were saying, let's get new projects, yes. But let's get platforms that we already have, that are already developed, use those platforms to take them to the next level. 2 months ago, we announced we were advisors to Iberdrola on the sale of the certain power generation plants. But the most important thing is that's not just an M&A deal and that's it. It's an M&A deal that's committed to billions of dollars of investment in the renewable energy side of things. So obviously the president, her first reaction was, what's happening here is Iberdrola is leaving. And then you go, yeah, well, because they're focusing on other aspects. It's not because they didn't like Mexico. People thought it wasn't. But you got a global player coming in, obviously with international capital next to them. Banks financing, we're participating, BBVA and others are also involved in financing this. But very importantly, it's what comes next. But that's where, obviously speaking to the Afores, we want to get them involved in this, and the operator wants to get them involved, but it's easier to come into a set platform than to start from zero and say, this is the project, this is what I want to build, here are the plans. It's not going to get there. So I think they're obviously, you need to see industry by industry, project by project, but that's, I think, where, as an investment bank, we try to separate ourselves and position ourselves with international and local clients to see how we can add value.
As we've seen across the world, we're seeing the rejigging of the entire global economy. A lot of companies, indeed, are leaving Mexico and other countries, not because they're scared of Mexico, but because they've got to reconsider where they're positioned in the world. I want to get to you in a second, Roberto, because I think we've got a very similar question for you as Raul answered. But first, because we've just mentioned it, Gautam, how are you dealing with your analysis of Mexico on the basis of this rejigging of the global economy?
Yeah, absolutely. So, look, I think any nation has choices, right? So, unfortunately, a lot of press and a lot of well-meaning people focus on the mega project. And they think if only they could get that mega project done, then life would be great. And I will tell you, at least my experience, or maybe my luck, is that mega projects come with mega problems and mega issues, and they get embroiled in controversy and time passes, right? The way to succeed in life is to actually break the problem into mid-market type projects that are easier to execute, given where Mexico is. China did not start building the mega projects till the end of their sort of industrialization, not in the beginning of their industrialization. So what Mexico needs to do, in addition to the mega projects, actually focus on the mid-market and just open it up. Right? You open up the mid-market. So think about the trailer business, the cold chain, the day-to-day business that helps industry. And you need to completely open it up, invite foreign capital to come in. There's plenty available. As long as you lower the risk for that capital, it'll come. And by the way, if you don't, it'll go somewhere else. Right? Because we invest in 72 countries, so we owe our fiduciary to try and compare the risk and return. So opportunities here, you're sitting on one of the largest reindustrialization in human history, which is the Western Hemisphere reindustrializing themselves, decoupling from China. I think you'll never get this chance again, at least not in my lifetime. So don't squander it. Just do the mid-market projects. Get some easy runs on the board. One of the panelists earlier talked about early success. Get some early success in, and then more will follow. Right? And I think that's our advice, at least that's how we do it. And getting those mid-market projects done invites other equity and credit investors to come. You do need a big credit market, a local debt market, but it's not there today, right? But it'll happen over time.
Mm-hmm. I want to sort of, nearing the end of this conversation, it's flown by, I want to really hone in on the investments that are happening, because I think, again, right, we're always talking about why we need investment and how to get it, but BBVA has been one of the biggest announcements this year in terms of the investment it's made. Could you tell us a bit more about that, where it's come from, where the logic is, and where that investment is going?
Well, I think BBVA is part of the Mexican dream that also exists. I tell you that 15 years ago, this bank had 22 billion of Mexican pesos result, Right now, we are 6 times that, 15 years from that point. So I think the Mexican dream exists. There's a lot of opportunity in Mexico, and I think, again, I think we can be at these events and speak, and I think the challenge that we have in Mexico right now is to pass from PowerPoint to action. That's the challenge. And to pass from PowerPoint to action, there's a lot of things that need to be done in Mexico. These kind of events are good, but I think there's a lot of things that we have done in the past that we as BBVA feel that were good decisions at that point. First, we built a lot of relationships both in Mexico and the US. We built a good relationship with government, with every government. We lend to the SMEs. We are building and investing in a lot of SMEs. We're putting a lot of money in SMEs right now in Mexico. We're building infrastructure. We're putting money in real estate. So I think, and Mexico pays off. I think Mexico pays off. If you do the right job, Mexico pays off. And I think right now we are in a very good moment in Mexico, or challenging moment in Mexico. If we build a relationship with the US, we build dialogue between CEOs in Mexico and dialogue with CEOs in the US, build dialogues between governors in Mexico and governors in the US. We had the Arizona's governor a couple of days ago in Mexico. I think that kind of things should be done in Mexico and in the US to build a more competitive region than what we are right now.
I think this point that you've made about the specificity at the state level and your point about needing to break the problem down, that's something we're doing at the Mexico Political Economist, which is literally taking this massive plan, Mexico, and dividing it to its constituent parts to see where we start and where the actual starting point, where the investment needs to start. So I want to use our last few minutes for a 30-second reaction from each one of you to tell us what we need to do now, the first thing right now, to get economic growth and investment in infrastructure going. Let's start from all the way over there. Raul.
Well, without being redundant of what's being said here, I think I share Gautam's point. You need to show quick results because I think, as Carlos pointed out, you do need the internal driver capital, but you need that complement and create that virtuous cycle with international capital. And international capital is really looking at Mexico right now, but they're not going to be looking at Mexico forever. And so that's why we definitely need to really fast forward, work with the government. I think, at least for now, my perspective is the government has the best intentions. They're very open. But to a certain point, there's too many cooks in the kitchen, and we just need to focus on 2 or 3 sort of very, very easy, quick wins and build on that. And deals that we can really replicate so that maybe a couple of international investors saying, oh yeah, now things are moving, because that's the point. It's really generating that momentum. And so that, 12 months from now when we're here at Milken, we can say there's these 2 things that have already, 2 or 3 things, and there's this pipeline that's based on this corn. Like that's what you start, because that's when you start aligning, each of the parties that I refer to, whether it's local or international, whether it's private or public, you definitely need to work on that. And then you start fine-tuning.
So identify and execute, quick, easy wins. 20 seconds, Carlos.
No, I'd say, again, going back to your F word, as you put it, on the funding side, I think one thing that is key is to be able for companies in the sector that want to fund investment to be able to introduce themselves more to the Afores. Again, this is a segment that is not very much accustomed to looking at different credit entities. We've been quite successful in raising a global peso note program, which is for the most part funded by Afores, but also with international investors. And I think that's a good example where you can bring the foreign investors, the local investors to the table and share the risk, get more liquidity and so on. And it's something that is also quite pragmatic in terms of getting going with a particular project that you want to fund, and also providing this bridge between the locals and the foreigners. Okay, I'm talking only here about debt, but I'm sure there's other projects where you could also bring in some equity components.
So, 30 seconds.
Speak loud, don't be afraid, move to action. That's the things that you should do.
30
Almost actually 0 seconds, but first of all, crowd in capital. You'll never have enough capital. You have a forays, take $1 from there, but you need to show that you have skin in the game, you want to take risks in your own country. Second thing, focus on contract law. The more you focus on contract law and the sanctity of contracts, the lower the cost of capital will be. It's as simple as that.
Thank you very much, and thank you all for listening.
Thank you.
Thank you.